Good afternoon, everyone. David Johnson, MD, LEOpropcrowd. We're going to be kicking off the webinar just in 1 minute. So you can grab a pen and paper, grab a cup of coffee, whatever you want to do, and we'll kick off just literally in 1 minute.
I'll give them a little world tour of some places in the meantime with virtual backgrounds.
Sounds good. Your sound's off currently, John, I think. There you go.
Okay, yep, good point. Yeah, I was saying this is Hawaii. Well, my t-shirt's from Hawaii. The scene reminds me of Hawaii. So as the waves roll in and the palm tree blows. This is the view out the window from my balcony here during this lock-in phase here in London.
The sun is shining in London, but look at that photograph anyway.
Well, it is today, but also this is the barbecue area in Hawaii. This one I know is the property in Hawaii. I know this one. And the other one that showed the shard, I took that photo, so I know where that one's from. I just don't have this animation one really locked down. I'm not sure where it is exactly.
Yeah, brilliant.
A little entertainment.
Yeah, okay, thank you. Right, so my background isn't just quite as exciting as yours. Mine's of a bookcase, but there's plenty of business books and football books and different things in there. But anyway, okay, so just gone just after 4 o'clock. So listen, welcome everyone once again to our weekly webinar. We've now entitled this The Lowdown in the Lockdown. I think it's a really good slogan, and I have to attribute my wife Brenda for that slogan, so I'll give her the credit for it. But listen, thank you for taking the time to join us. Really appreciate it. And we're in for a really special treat today because we're due to be joined by Mr. Darren Gibson from Fitzwilliam Capital Partners, who's going to be joining in about 1:15 and doing a slot for us on planning. But this webinar really is about myself and John Corey from Property Fortress. So let John say a quick hello if he wants to wave or introduce himself.
I was just making some notes because you said football books and football and reading. Do those two go together?
It's the real football, John. It's not that American thing with an odd shaped ball. Our ball's round.
I wasn't talking about the football shape. I was talking about whether reading and football goes together.
Oh, it definitely does. Definitely does. Of
okay.
Shells and shells, different things. So yeah, so listen, most of you on the call will know John. For those of you that don't, he runs Property Fortress, a monthly networking meet in London. It's been going for about 14 years, probably about the oldest. And of course, for those of you that know me, I'm Managing Director of LEOpropcrowd, and we are a property crowdfunding platform. So these weekly webinars are simply about achieving 3 things. Number 1, update on the market, what's happening within the world of property investment in the UK, a couple of tips on working from home, and then we bring on a special guest who has a particular expertise in an area of property investment, and we have like a Q&A, and people have found it really beneficial. The feedback we've had on the webinars we've done really has been exceptional. People really are glad we're doing them. They're enjoying the updates, they're enjoying the expert speakers, and it's just a way of connecting during the current lockdown. So the agenda is as follows. We talk about the lowdown and the lockdown, a bit about the property market update, working from home productively, and then we have a special guest. Now, I always like just to emphasize it does feel a little bit strange sometimes talking about business, making money, property in an environment where a lot of people are going through suffering and pain currently in the UK and indeed throughout the world. And our hearts do go out to those who have maybe lost loved ones or who have people in hospital. We have had a relative was tested positive and thankfully they've recovered, and 3 pretty close friends were all positive and again have recovered. So it's sometimes difficult doing business as well as an environment where people are obviously in pain and suffering. So just want to make that caveat before we start. But life does go on, and obviously those of us involved in property are trying to make sense of the current situation. So let's just dive into the first bit, which is really just recognizing the fact that COVID-19 will affect all aspects of the UK property market. So I know, John, you're someone that people would go to, have a look at what you say on social media. You're probably getting loads of messages and emails asking you what is your take on the current situation. So how do you normally start a response when you're asked that question?
So I think people have to remember that if 5% of the population was to succumb to the virus and actually die, that means 95% of the population is going to be around afterwards. And I'm not trying to predict what the numbers are, but the majority of the people are going to come through this, come out the other side. Economically, we may be worse off than before, but we're still going to need housing, all the rest of it. Second is, some of the things people are getting fixated on aren't really relevant. So unless you're a big stock market investor, what the stock market's doing probably has very little to do with whether your tenants are paying the rent or whether your development project can get a crew on site. So you do have to be able to focus on the mission, focus on the objective, whatever language you want to use. They say good leaders are the people that can actually see the bigger picture rather than get so fixated on the details that they miss the bigger picture. So it's always, in these types of situations, it's like step backwards for a second, pause, think about what's going on, and does all this stuff that's actually happening really matter to your investments, or is it more about it impacts your family, so take care of your family, or it impacts a friend, take care of the friend, but it doesn't necessarily change whether your properties are still going to be valuable. So.
Yep, and probably the one big word that those involved in property don't like is that word uncertainty. There is plenty of that around, but it doesn't mean that it can change quite quickly and a degree of certainty return to the market whenever this virus is sorted out.
Well, I would disagree. I think the people who don't like uncertainty are the amateurs. And it's the professionals that realize that it's the uncertainty that creates the opportunities. If you're going to look for a motivated seller, a motivated buyer, or a flexible lender, and all these other things, these are those times when people's motivations change, and you get to see the real colors that they're operating under. So it's actually in the trading world, the investment banking world, where I spent some time, volatility or uncertainty is a trader's friend.
No, that's a good point. That's a good point. The lockdown obviously will affect completions primarily, which will then affect sales and purchases, which in many ways is the lifeblood of the market. So there will be an impact short term in that with viewings and valuations, etc. It was interesting. I came across an article this week in one of the national papers, shall we say, and it kind of had a wry smile because it kind of summed up probably where a lot of people see a headline and that leads to uncertainty and fear, but they don't take time to read the small print. So the headline, one of the national papers, was UK house sales will collapse in 2020 as the market goes into deep freeze. So that was the main headline, John. And then below that was major analysis of coronavirus impact stresses property prices will dip only 3% and then rebound next year. So it's kind of like headline, which kind of creates huge drama. But what they're actually saying was that in this particular instance, the study showed that house prices might fall 3%, but will recover very quickly, which isn't necessarily a bad thing.
So if prices drop by 3%, that negates more or less the cost of the supplemental stamp duty. And if the chancellor trying to restart the economy also chooses to pause stamp duty or soften stamp duty or reduce stamp duty, then do we have a buying opportunity, or is it really steady as she goes?
Yeah, no, that's a good point. So I think the government have been quite good at responding quite quickly. To the construction industry, setting out guidelines which can be accessed from the government sites, giving clear direction on what can and can't be done. And the mortgage companies are obviously responding, different ones at different paces. But I think most people that I can see are certainly getting answers to questions, and then they can make up their own decisions from there. So in terms of people who come to you and ask, where does John Corey get his information from, or where would you look to in the morning, over a hot drink to sort of catch up on what's happening with the economy and things that might affect property?
So I just love these questions. And it is in you, David. I do get questions like this. So I think the answer to that is really based on what it is. What is your strategy? If you're a landlord, then you should be focusing on your tenants, the rules around tenancy, rules around eviction, late payment of rent. If you're in development, then the rules about construction sites, home sales. So you really do have to focus on the sources of information that have relevance in your sector. And you also have to then focus on true factual information. It doesn't mean something you read isn't a fact, but you want to check the sources. You want to see if there are multiple independent sources. I mean, people were starting to send me messages about 5G phone masts. It's like, really? Are you kidding me? Where did you get this from? Oh, well, I saw it online. It's like, okay, well, check where it came from.
Yeah.
There's some stuff that just goes viral in this time. And, you know, one of your best mates there, Mr. Trump, he's famous for taking something that's not factual, and if you say it enough times, it starts to sound like a fact. Well, that can cause good or bad things to happen, and people need to be careful about making real decisions on sketchy information.
Mm-hmm. Yeah, no, that's a really good point. I think people do have to look at sources, and I'm on a number of WhatsApp groups, and some of the nonsense that gets put up there is crazy. So yeah, I think the advice would be check the sources of information before you start making decisions on adjusting your model. But yeah, so in terms of key takeaways, I think you've really summed it up there. It's you know, a degree of calmness, not rushing in and panic. There will be things that will affect certain businesses, but you've got to be able to adapt and improvise and find solutions. And for some people, that it won't really affect a whole pie. It's just one of these upward curves you get, and then you get a downward curve. We're certainly on a downward curve, but the question is it going to come straight back up, or will it take time? But it's just part of the volatility of the market, I suppose.
A slight example, more than 50% of the UK housing market has zero debt. So some of us who are investors that are constantly trying to optimize the income and the interest rate, we get so fixated on what the interest rates do, what's going on in the loan market. Well, half the country doesn't care.
That's a good point. Very good point. Okay, well, that's a good one. I'm sure you're happy to take any calls or any emails to you for any further input on that. So, okay, I see Darren has joined us, which is great. So, one slide before we move on to our special guest today, and that is some tips to working from home. And again, I've had some really good feedback from people who been in business many years, and they've said to me, David, I'm actually struggling with working from home. I'm actually struggling with routine in my life, and with the family there and the spouse there. I've actually found it more difficult than I thought. And that's slightly strange for me because I've worked from home as a base for about 23 years. So I've kind of got that down to a fine art, but it is a little bit different having both my sons at home all the time. And that leads to the challenges. So just a few very quick points when you're working from home, particularly if you're on webinars and hosting Zoom calls, be aware of noise. There'll probably be some noise that can affect meetings, or the phone ringing right in the middle of a Zoom call or a webinar. So just be aware of what noise might be created during your meeting, and you can try and head that off beforehand. Needing space is a funny one, particularly households that have numerous kids. Kind of one kid might grab the kitchen table and put all their books out. Maybe someone else has grabbed the dining room table. So when you want to go and do a bit of work yourself, then where are you actually going to put your books out and put out your phone and your laptop? So again, a bit of management over space is important. I use this word neglect, and John, you can comment on this one when I finish this sentence, but I think there is a danger. And I found I was talking to someone literally about 2 hours ago, and they made this point that they found they've just sat in the office for like 9-10 hours a day, and so focused on their work that really everyone else in the household is being neglected. And that's certainly not great from a spouse point of view, particularly with kids. It's important that you maybe get away from work for half an hour, even during the day perhaps, and spend some time with the kids and the family when they need it. Any observations on that, John?
I think people are, you have to find what works in your family, and you have to sort of dance around it. And my wife's actually on something right now with, I think, Chicago and I don't know where else. And she's in the other room. Well, technically it's the bedroom. And if she's not careful, then you see some of the bedroom furniture, which maybe is inappropriate or maybe it is. We've sort of dedicated a corner of the living space I'm in right now for the fact that I want a green screen with lighting, because I'm doing essentially these virtual screens. So yeah, you do have to dance around. And as I said to my wife, okay, you and I have to agree in the morning who's going to be what rooms, or who's got a really important session versus you can go out in the balcony, enjoy the weather and do it from there, but hopefully not disturbing the neighbors too much.
Yeah, no, absolutely. And those are things that really have to be discussed among the people working from home. So they're probably not things that people thought about. But
one other thing though is, so I'll be looking down because that's where my notes are. They're in my lap. And then I'm going to look over there because that's where I can see the attendees on the list. And if they have any questions, they should put it in the Q&A. So that means click the Q&A button, type your question. But that means I'll be looking over there. So when it comes to eye contact becomes harder if you have different screens or different things. In a normal meeting, you would know what people are doing because you could see them doing it. You would see the bigger context. Here, it's very narrow.
Yeah, okay, very good. And last one then is just nuisances, and that can be something that you're not really planning on, or but you can very easily be affected by things that just can kind of go wrong. I was doing some filming on Monday, actually for this webinar, and a neighboring cat happened to come around and just would not stop meowing for like 25 minutes. I literally had to stop the filming as this nuisance kind of prevented the plan. So yeah, be aware of things that can affect the plan of what you're trying to do. So moving swiftly on then to our guest speaker today. And Darren, if you hear me, you can unmute yourself and bring your video on if you can, please. But we're absolutely delighted to be joined by Darren Gibson from Fitzwilliam Capital Partners. Exceptionally busy man. We appreciate him jumping out of a meeting to be on here for 20 minutes and then straight back into a meeting. But I've known Darren now for about a year and a half, and I'll let you, Darren, maybe just initially explain a bit about your background, what you do, and then I'm going to let John sort of ask some questions to you and just take you through really one of your expertise, which is planning uplift.
Thanks, David, and a very good afternoon to you, John, and all the webinar participants. Thanks again for having me on. In terms of my background, David, as you know, I'm a property lawyer by trade. Have worked in all areas of residential property, a lot of different areas of commercial property, mixed use, residential, commercial, and anything up to renewable energy projects consisting of wind farms. So a broad experience in the property sector over the course of the last 15 years. I've worked in big firm environment. I've worked in smaller practices and opened up my own practice in 2007. Running parallel with the legal career, I've always had an interest in property investment and property development. I bought my first property at 21, buy to let, and have done everything from self-build to multi-unit development over the course of the past 15 years, including planning gain, as we're on to discuss this afternoon. About 7 or 8 years ago, we established a business in the UK, based in Cheshire, to focus on multi-unit development. And we have developed about 14 projects, city centre based, anything between 16 units up to our largest project, which was a 77 unit scheme. We constructed our last scheme in May of last year and sold that entirely, and just have been taking stock since, given some of the movements in the property market. We evolved into residential development sites to feed our own pipeline first of all, but having been in there for a while, we realized there was an appetite amongst other developers and investment groups for site that came with planning consent. So that's when we really started to focus on trying to identify well-located, larger residential sites close to city centres, applying for planning permission on them, and again, considering those for our own use, but also opening up the possibility of selling those to third-party developers. Unfortunately, look, it's been progressing relatively well. We've had some success. One or two of those we're going to talk about this afternoon. And we have a number of additional significant projects in the pipeline that we're looking to develop going forward.
Cool. So let's talk about a case study. And in the language of LEOpropcrowd, the idea of a case study is for Diareann or anyone else, Fitzwilliam Capital Partners, whoever the party is that had the deal, and it's to highlight a past deal, something that's already closed, that's already finished. There's nothing a person could do to invest in this. It's an opportunity for, in this case, Fitzwilliam Capital Partners, to highlight what they did accomplish in the past. And it's a way, therefore, to build some interest among investors who might want to see something similar in the future. So take us through this one, Diareann.
Yeah, so that's a site that we purchased in Sheffield. It was called Meadow Hall. It previously was a sports and social club facility, mainly comprising of soccer pitches. There may have been some cricket facility there as well. It was very well located in a densely populated residential area, and we felt that it had a good prospect of obtaining planning because the facility hadn't been used for a number of years. That is one of the requirements, because when you're buying sports facilities, we had to obtain the consent of Sports England, and one of their requirements is that the facility hadn't been used for 5 years, so it satisfied that condition. And we engaged our planning consultants, guys that we worked with for quite a while, and they had a pre-planning meeting with the local authority. That was positive, and we entered into an arrangement with the vendor. And on that transaction, because there was risk attached to it in the sense that it was a sports facility, it wasn't going to be a given that Sports England would grant consent, and it wasn't going to be a given that the local authority would ultimately approve, albeit we had a reasonably good idea. We entered into the contract subject to planning permission being granted, that on terms that would have been satisfactory to ourselves. We paid a small deposit, in that case 20 or 30,000 pounds, that we agreed the vendor could receive, so it was non-refundable, and that created a good dynamic between ourselves and that particular vendor, and we ultimately sold the site to another residential house builder, having acquired it, again subject to planning, for 1 million, having paid 30,000 pounds as the deposit. We were very fortunate that we were able to sell it for 2.1 million prior to completion. So it was a pretty successful deal for us. So in standard British or Irish English, you said pretty successful. So you had a gross profit of approximately £1 million sterling. I would say that's okay. Maybe you could do better, but that was okay. So I just wanted to really clear to everybody, this case study was highlighted to show something Fitzwilliam Capital Partners had done in the past. It's an example of projects they would be doing in the future. And in this case, there was a non-refundable deposit, smallish amount, 20, 30,000. There was a commitment to purchase the site subject to planning. And then there was all the work necessary, and Diareann has a whole team of people who took on this project when it comes to different consultations and planning and things like that. So if you have any questions, put them in the Q&A. I know one person already has,
But anyone else, if you have a question, do enter it, and we'll address those questions just before we move on. Richard is asking, what would be the GDV if the 91 homes were developed? So the post-development value.
The GDV on that one, I believe, was around 58 million.
So 58 million, Richard, for the GDV. The development costs, I'm not sure that you ever actually figured out the development cost, Darren, given that you didn't take this forward as a development. Do you know what the other party thought it might cost to develop?
Sorry, John, my apologies. The total GDV, because there was mixed use commercial and residential, and there was 68 million. And we priced in a developer's margin in there of 25%. So when we take in our developer's margin of 25%, together with all of the other relevant costs of construction and all of the other professional costs, that would have given us total costs of 65 against total sales of 74, which would have given us a residual land value of maybe circa 9 million.
So I missed that. The residual land value was what?
9
okay.
With planning.
So there was 9 million and you sold it for 2.1, is that correct?
Oh, apologies. No, sorry. I thought you were talking about our.
Yeah, no, on the case study. So everybody that just heard what he said, forget that. We'll get to that in the next slide, which is the actual raise for a different project. But for this case study, the GDV was how much?
Well, it was 100 units. I just don't have that development appraisal with me now. But you know, you'd be talking maybe an average of maybe 200,000 a unit. Okay.
And then the development cost, Richard, to answer your question, I think would be a little bit harder to quantify because each builder will have a different view on the cost. You certainly, as the party selling a site with planning, would have a ballpark estimate, which is how you end up deriving the value of the land. If David's there, move us to the next slide and we'll talk about the deal that was most. So this deal is Alderman's Green. Darren, take us through it.
Yeah, so the Alderman's Green project was the first project we worked with LEOpropcrowd on, and that was a site roughly 3.5 miles from Coventry city centre, 11-hectare site, very well located, and again, it had a previous planning history, but not for residential development. It was more for marina-based hospitality permit. And we felt, given its location and the need in that particular region, plus the obvious demand, that a residential site would work extremely well. So we had some preliminary meetings with through our planning consultant with the local authority, and they had some really positive indications. So we decided we'd again enter into contract subject to planning permission in that case, and we agreed to acquire the site and proceed to make the planning application, which we did at the end of October, beginning of November. Now, obviously, with a planning application of that scale, it does take a little bit of time. There's seasonal ecological studies that need to be completed to support the application, as well as, you know, the usual transport studies and perhaps other queries that the local authority have on design. But yeah, look, it was something we did with LEOpropcrowd. We looked to raise 120, and through the good work of LEOpropcrowd, we raised £110,900. So pretty much nearly a full raise.
So just to take us to the high level, because now we can get into those details, and then I have a few other questions. So the total GDV, this is a mixed use site, residential, commercial. What's the total GDV you're projecting in this?
Yeah, we had our total GDV, when you take in the residential and commercial portions, at around 74 million.
Okay, and then the construction cost and the margin, the 20-25% margin that you use. So can you back us through those numbers to get to the residual land value?
Yeah, we would like, and I think most developers like to see a 25% margin in there at the outset. Doesn't always work out like that, but at least you know, it allows you to price it appropriately at the beginning. Then obviously you include all of your fees, consultants' fees, together with your construction costs, and any of the other professionals, including finance costs. And we'd priced on our total cost on a project like that, if you built it out, at around 65 million, with total sales, as we said, of around 74, 75 million, which left you with a residual land value after receiving planning of somewhere in the region of 9 million.
Very good. So 9 million is what it's worth after planning's obtained. Coming to this project, you had put in, you actually exchanged contracts, but it's a conditional exchange. And these things were all in the raise because this was a live raise. And I am one of the investors, or my company is in this raise. So I know some of the details, just like any other investor would, or anybody that wanted to read the documents at the time. So the conditional exchange, 100,000 deposit, non-refundable, as you had said in a different part of the presentation on this one. So 100,000 is your money that you're putting on the line. My history with this also says that I know how David and Darren and myself got involved when it comes to putting this together. So Darren was a member of the Super Select VIP program at Progressive, and he was referred by Mark Homer to David's platform to do a raise. Darren's company, Fitzwilliam Capital Partners, was already going forward with this project. They already had the money to completely take it forward. They didn't need us as the crowd, but Darren sees a bigger picture. So he wanted to get started early with crowd funding, and that's why this raise was put up. So while the actual project was ticking over and things were getting done, that's when the campaign kicked in. Now I know Felicia has a question about how long the campaign took. David might know better. I don't quite remember the timeline on this one. So how long did the campaign take?
Well, it was really quite quickly, because David and I started talking around the end of September, beginning of October, and obviously there's some information that had to go over and back in the initial period. But I think from start to finish, David, correct me if I'm wrong, it was around 6 weeks before the funds were raised.
Yeah, I think it was 6 weeks to raise the funds, then another 2 weeks of drawdown, you know, but certainly, you know, 9 weeks from when we, I think, had our first sort of Zoom call, then a face-to-face meeting in Belfast, to you being in funds. Yeah, certainly 9 weeks. So it was relatively quick in that sense. Obviously, because your firm is well established, you're able to put a couple of your team members on the project to supply the information to us very quickly. And that always helps when it comes to a raise, because there are some obviously documentation, legal entity, and DD that's required before a raise can come onto the platform. So you guys move very quickly in that, Darren, which obviously helps our side at getting ready. But I mean, what was your, I mean, John's alluded to the fact that you saw this as a longer term sort of strategy. So what was it that you saw crowdfunding offer you as a already well-established developer, obviously doing deals, you're making $1 million in one deal with planning, but what was it that you saw as a long-term strategy that you saw the benefit of the partnership?
Yeah, well, look, I mean, we obviously had various projects that we were committed to, and like any business, you know, you have a certain amount of capacity, both in terms of, you know, human resource, in terms of financial resource, that you can throw at your pipeline. And we were quite comfortable that we had filled that going into 2019, 2020. But at the same time, because of the context that we had developed and the people we knew in the industry, there was still a lot of deals coming to us that they looked like really good deals, and we felt that if we had another avenue to fund those, then there was an opportunity for not only our business but for other people who wanted to participate in it. So that's why we challenged the guys in Progressive, and thankfully they put us in touch with yourselves. And the first one has proved so far to be a positive experience, certainly on the raise side, and there's no reason why it can't be replicated many times over. And I mean, I think John alluded to it earlier. Certainly these are challenging times. It's a very, very difficult space that we're operating in at the moment. But I think we recognize that it's not going to last forever. Yes, it's going to change the game, but the fundamentals are that, significant residential property stock is required in the UK. That's the game that we're in. And, people are going to be looking for houses. People are going to be looking for sites, and, somebody's got to give it to them.
Yeah, no, very much so. So before I go to the last slide,
I'm good.
Go ahead, John.
Yeah, I'm good on my side. So, David, I'll let you drive from here.
Yeah, I was going to just ask you, John, to comment on one thing, and that was the structure of this being a preference share, and the way you sometimes describe that in terms of a buffet, I think would be good. And then maybe just allude to the fact that obviously that same structure can't be used exactly as it is due to some changes before Christmas.
So a couple of things. When Darren came to the platform and wanted to raise the money for the project, he didn't need the money, and he was funding the project anyways, or Fitzwilliam Capital Partners was. And there were also other possible exits. So partially as a learning or things that have been figured out from other prior planning raises, we agreed that we would set this up as preference shares. So the passive investors, the people who have no control over the project, would be paid out first, and they would hit their target return before the developer, Fitzwilliam Capital Partners, receives a penny. That way, if the project doesn't go exactly to plan, instead of having the passive investors take the heat, it's actually the developers taking 100% of the heat. But after the target investments reached, then the split goes back to the normal split. So that was a little way to sort of bias this raise to make sure that the passive investors were first in line. The buffet example is you have some friends over to your house. You don't rush to the front of the line and eat before they do. You actually serve them first, make sure they've got enough on their plate before you worry about feeding yourself. And Darren very graciously, and Fitzwilliam Capital Partners as a firm very graciously said, of course, we want our investors to come out happy rather than we stuffed our face and left the investors with what was left. Second is the FCA has clamped down on preference shares and mini bonds if it's related to development, and things like planning would be development. There's been some bad characters in the market, so they put a blanket ban over that. Therefore, preference share type offers like this was done before the ban came into effect. But in going forward in 2020, only high net worth and sophisticated investors would be able to take advantage of a deal structured this way. So either we would have to structure it differently to accomplish materially something similar, or we would end up saying only sophisticated high net worth could actually take advantage.
Okay, so if I just make a couple of points on the right, and then Darren can make a couple of key points to wrap up as a fundraiser. So there's a few questions popping in here about things like, return on investment and security and things like that. So Planning Uplift is by definition a more high risk investment strategy. Capital is at risk, as it is in all these types of equity investing. I think that's very important to emphasize. In terms of security, it's not security in the sense of a loan, because the person who invests the money becomes a shareholder, becomes effectively an equity partner in Darren's SPV, and therefore, if the project goes as planned, then there is a share of profits. If there was an absolute, worst case scenario, and for instance, the planning wasn't granted for some reason, well then if the profit isn't made, it's not there to be distributed. So that's how this type of planning uplift works. So the reason potentially high returns can be achieved, the 45 to 50%, is because it's higher risk. And that's really what's offsetting risk versus reward. So I would certainly say to people, the unforeseen is always possible. So therefore, I think doing DD on the track record of the fundraiser becomes more important in these type of deals. And that's where Diareann and Fitzwilliam Capital Partners are certainly very good at providing multiple case studies, multiple track record examples of things they had done. So I think it was quite easy for the investors looking at this particular deal to get a really good sense. I mean, Diareann actually came, met some investors in London in a workshop. He did numerous webinars. He did some phone calls to answer questions. So he made himself available as a fundraiser. And I know that gave the investors certainly a lot of comfort. So I know, Diareann, you're on a tight clock here and appreciate your time. Is there any sort of key points just in summary, if someone was on the webinar and they're thinking of getting into planning or maybe doing bigger deals, the sort of deals you're doing, just a couple of takeaway points for them?
Yeah, David, I mean, I think you hit the nail on the head there. Due diligence is the key. Due diligence on the property, be thorough in your investigation, get really stuck into the detail. And that's, goes for any property transaction really, but particularly planning uplift deals where, your funds are at risk. I would say that in relation to these types of transactions, if you haven't done one before, a really good way to get in and learn about, the system and learn about the process and learn about the dynamic between vendor and developer and planning authority is, invest a small amount, be it £100, just to get in and see how it works, and then you can make a very considered view as to whether or not something like this is actually for you. And I certainly would recommend for people who haven't completed this type of transaction before, to test the water with somebody else, or not even ourselves, but it could be some other kind of planning game deal on with a very, very small investment, first of all, so that you get absolutely comfortable with the processes and the risks that are involved with that type of transaction. Because look, we've pointed to the fact that we've had success in Sheffield, and I could point you to a number of other transactions that we've completed in the recent past that have worked. But we also look at a lot of deals that don't work, and there's risk in it. There's planning risk in it. You have to manage vendors. I mean, one of the projects that we have at the minute, one of our vendors is been difficult. So you have all of these challenges, and nothing comes easy. It is hard work, but that's what we're there to do. Nothing comes easy. That's good.
Yep, no, I appreciate that, Darren. I think that's a really good summary of the realities of it. There's certainly profit there if you get it right, but there's a journey that has to be travelled, and there's a few obstacles on the road to get there to land at that pot of gold, as you say. So I think planning actually is something that people may look at more in this current environment, because where completions are going to be limited, and valuations, etc., people could look at this as a way of doing some research and setting up even some smaller planning deals that they could look at whenever things change. So listen, Darren, really appreciate your time, right? I know you're a very busy man with a family. Ironically, you're only about 2 hours drive from me over in Letterkenny, but in the current climate, I don't think we're going to be having a coffee anytime soon. So we'll stay in touch by Zoom.
Yeah, look, thanks very much for having me on. I really appreciate that. John, very good to talk to you as well. And I wish everybody on the webinar a very happy Easter, and stay safe and stay well. All the best.
Brilliant. Thank you very much, Darren. All the best. Talk to you soon. So, okay. So, Ray, just
quick comment.
Sorry,
back to the question. So, people need to understand you won't get a charge on a property when actually you're not lending money. You need a loan for there to be a charge. So it wouldn't make any sense for there to be a charge at an offer where you're buying shares in an SPV. So effectively, if you need a charge, then stick to lending and expect to get lending type returns.
Yeah, that's a fair point. Okay, so really just to really bring this to conclusion, the last 3 or 4 minutes, Benjamin Franklin, very famous man, an investment in knowledge pays the best interest. And that's really one of the reasons for the webinar, is to provide knowledge to people. And there are, of course, people who are currently at home, sort of locked down, and are more than open to different avenues to learn new things. And I've certainly had a number of people contact me, probably even more than that have contacted John, asking questions or wanting to spend time on Zoom going through different aspects of property. So I think that sort of demand from the market, if you like, has driven John and I to put together a joint training online education set of modules. And really what we're going to be doing is producing these. They're probably going to go live either next week or the week after. They're 1-hour modules on Zoom, and you can see there they really cover the basics of some property investment fundamentals as well as crowdfunding. So I'll let you, John, sort of comment on what we're trying to achieve with this and the value we can bring.
So the first module is all about essentially accessing capital, other people's money, how to sort of romance these investors so that you build relationships, know, like, trust. And you have to do it in a way that's compliant with the FCA regulations. It's a criminal act if you don't follow the rules. Second module is deal analysis and deal structuring. And this is a little bit less about how you think of evaluating deal and more about how to structure it and analyze it so that the other investors want to invest in it. There are things you should be doing when you're making your offers and setting up your paperwork so that you can actually bring in other investors. Third module is now about how to build the crowd, the case studies, the digital marketing, using social media, things like that. It's no good having great deals if you don't have anyone lined up. And the way to line people up before you have a great deal is use your past track record. And if you don't have a track record, then you want to partner up with someone who does and distribute case studies, essentially. Last module is also then about the you have to get into the skin or understand the psyche of the passive investor, the people that maybe the gray-haired angels, like someone speaking right now, where what are we looking for? What do we want you to be able to do? I was discussing one today where the grammar is a mess. They can't figure out how to explain what they're going to do with the money. So in my head, I'm thinking, you know, this is too much work. I'm out. And it might be a great deal, but they clearly presented it poorly. So they need to think about how I'm going to evaluate their deal, the questions I'm going to ask, and people like me so they can attract the capital.
Yeah, and I would say you'd probably agree with me, about 90% of the questions that we're asked will be covered in these modules in some shape or form. So it's a way of kind of, rather than talking to individuals, we kind of come on in a module and multiple people then obviously can join. Now you can see along the bottom, this is not about John and I making money. I don't think we're going to go too far on a $9.97 module, but experience has taught me that when something is free, then people do not value it. So we've deliberately put a small ticket price on this, just so people are having to take action, having to part with a little bit of hard-earned money, and then I believe they'll value it that a little bit more, and will come on. So they will be live, and then we will sort of tidy up the recording and then have the recording available, and that's something that we're going to be promoting over the months ahead. I think there'll be further modules that will develop out of this, and we're looking forward to getting feedback from those who take the module as well. Already some people who have registered are very much experts in their own field, but they want to learn more about crowdfunding or what's happening with the world of digital marketing, how it impacts on their business. So they're going to also have some really good feedback for us that we can incorporate in our modules. So that's really our 4-step module, and that really leads into something that's not for everyone, but more and more. I know John already has a successful consultancy business with numerous people. We do consultancy within LEOpropcrowd, and again, John and I are in many cases asked to be on the same call together and look at the same information or help the same people. So we decided to formalize that into a consultancy package, and particularly during this time of lockdown, someone can really benefit from bringing John and myself on the line. The package offers 4 hours of live Zoom sessions where we can really get into sharing screens and deep dive into whatever it is that the person wants us to look at. There's then a further 4 hours of deliverables around that, where we might have to do some preparation for a call or look at some information we're given, analyze it to then come back and give some input. And then we're also available for ongoing Q&A via email. So this is a package, is $1997, that you get in 8 hours of John and I. And John, anything you want to comment down in terms of the key values that we bring?
I mean, I think you covered it well. It really is more about the individual business, that what they need, because it doesn't have to be specific to fundraising. It can be a strategic discussion also.
Mm-hmm. Yeah, so I think it's fair to say we'd analyze the business where they're at, particularly a funding plan is probably why most people would come to us. How do we raise money compliantly in this environment? How do I build an investor tribe? But I also think the black book contacts is something that shouldn't be overlooked. John, by virtue of his grey hair, is a few years older than me, I think. But between the two of us, with the experience we've both got in property, we do have a very, very extensive black book of contacts. And one real value add to this package is that where you have a pain point, almost certainly, we can put you in contact with someone that can help you solve that problem, or at least point you in the right direction. So I think, John, that's certainly something that we're willing to bring to bear. Ultimately, it's about helping people. One thing I've always been impressed with you, John, is that you have a genuine desire. It's in your nature and character to assist people when you can. And this consultancy package gives us a sort of a wrapper to do that in.
What can I say? So.
It is, but it's definitely, I think people find that, about you in terms of you are willing to spend time with people and impart knowledge. Not everyone who has knowledge is actually willing to do that. So I think that's where one of your strengths lie.
If more people could bring good deals to the platform, then I have more choice. So, it's a little bit vested interest.
Yeah, there's always that, of course. So yeah, that's the consultancy package. So I think what we're trying to really emphasize here is, debt is not easy, certainly not as easy as it was a month ago. And equity is certainly harder than that. So what we're trying to do is provide solutions for fundraisers and discuss that with them, set a strategy, and help them to achieve funds so they can get on with doing their property investment. So John and I are happy to do a quick 15-20-minute call with anyone who wants to understand better that consultancy service. You can get a hold of my email address there, the mobile's there. Take a quick screenshot with your phone if you want, and reach out. For those of you that know John directly, feel free to email directly as well. And we're happy to have that conversation. And there is the link if you wish to register for the training modules. And I say we'll keep in touch with those that are registered about when we actually deliver that. And again, the details are there, so you can quickly snap that. But again, stay in touch with our social media, and again, reach out to us individually as well. There's no problem with that. So really, with that is the end of the webinar. Again, we're well under the hour mark, which is good, and really appreciate everyone taking the time to come on. I'll let John, anything you want to say first before I wrap up?
I think it's good, and just we are a little over time, so I'll keep my mouth shut. But anybody wants to reach out, definitely do so.
Yeah. Okay. Brilliant. So again, thank everyone, wherever you are, locked down around the UK or the world. Appreciate you coming on board. Of course, stay safe. Wish everyone a happy Easter and happy holidays over the next time. And hopefully we'll see you next week. But in the meantime, definitely stay safe. Thanks very much, guys. All the best.
All the best. Bye.